So just to recap one more time how many times we've done this, like check out how when I put a fib on here, the reversal comes back up to the 61. But then if I take that one off and I put it just on this one, notice that it comes back up to the 61 again. Now if I take it off this one and put it on the next one, notice how the 61 gets attacked again from the 127, 141. So this is something that I've found that's not written on the internet anywhere. So it's literally a mathematical phenomenon that's just as important as the 188, 200. If you understand, 127, 141 leads back to the 61. And it can change on a dime, but right now, if it's going to keep spamming it across, we have to understand the other way is on pause right now. This is the way it likes right now. And if we're not versatile, we're still going to be looking for 188s and stuff. But right now, this is what it likes. This is what I'm using. Not anything else from before. None of the old things. All new things. And this is double-shouldered head and shoulders now, where basically we've tried to make the head and shoulders, and it's swung at the neckline, and now we're coming back at where people have shorted it. That red zone is where people will have their short stops. We're going for them. We're going for those people that are short. We let them stay short all day long. We let them see the direction all day long. We're going to make them wrong in a minute. Didn't quite make it to the 61 there. Yep, there we go. So basically we've knocked out every single person that's had a stop inside of that red zone. And that's the first step. Starting it slow is not a bad thing. The low ATR convinces people out of it. Like they don't want to keep holding it, and then it starts blasting. That's the plan. The idea that the fast movements don't start at the beginning of this one, they start towards the end. And that's the idea. Because I can see there's no better way to do it. The people are positioned a certain way, the institutions have a certain plan. They are trying to get things done, period. And I can see what doing that would be. Getting to the B point and beyond. Going to mess with the people of the 61. Because they don't even know it yet, but these people are being targeted. Those people right there. And we're trying to think about exactly how we can make another bearish pattern correspond with that 61 so that they see two things that they understand. And sometimes people might only see one of those two things. That's good enough for them to get in. And we're going to take all of them out. But we have to understand, like the entries of the morning have been specifically off of 127s, or in some cases 61s. But if you're already letting some run from the entries we did talk about, those are the only entries I expect people to be taking, because they're from the best prices. Why give those prices up for a worse price? It makes no sense. So if you still have those prices, then you're interested in getting to the next target. And we're getting into the variables where I expect us to start seeing patterns form so that we can fail them, just like the head and shoulders. The head and shoulders created an inverse head and shoulders that was more powerful than itself, and it took all that time to show people those patterns and to make them have no impact. So it takes what people do know and makes it stale. Is it a deterrent or an attraction? The question is, do they want you there, or do they want you gone for some reason? Can we determine? Because why would they show the people something that we all know they know and make it so shitty for them? Make it so that even the people, like all of the people understand it's supposed to do one thing, and all of their force and everything that they understand about that pattern isn't enough to make it move. They become such a small part of the market, and they don't know that. Like the institutions don't want people to know that. You see how it went faster as it got on here too? Exactly like I said. Today it has done every single thing I have said for it to do without any question, without any kind of, this or that or maybe or any sort. It's just straightforward. This is exactly what it's going to do. It's going to take a long time to do it. But if you have the patience for any one move, there has been nothing that isn't worth waiting for. Absolutely every single part of this day has been extraordinary. As flat and sideways as it is, we are where we were basically 5 minutes, 3 minutes into the open. The entire day is up, spike, 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 and then finally up again. We've managed to create a pattern like this, where I believe this 61, where we weren't even anywhere close to it, I didn't have to get here to tell you it was going to fail. I knew in advance. Look at them. No impact. Doesn't matter how many people know about that level. They all just lost. I'm like, isn't that profound? Because there's one plan, and, this is the way they like to do it right now. And they will change it as soon as anybody starts to stand in its way. They will change it.
and it will be on us to understand how they will change it. But because the institutions are such a thing, and I have absolute faith in them, like God, literally have faith in the institutions every day to do their job. And for the people to be victims every single day, I count on it. Count on it with these institutions that clearly have a plan to deal with the people every day. And the people are the simple ones. You can see easily what they see. Literally 2 weeks of studying, you can learn more than what most people know. Literally. And figure out that like about 80% of the information pool that people are feeding off of, you can learn in 2 weeks. It's not medical science. It's actually kindergarten shapes and very simple ones. And I'm like, remember that it was slow. And I said it was going to start blasting. This qualifies as that? I would say so. And I wrote in there danger of failing upwards. I didn't just write danger of failing. I want to be specific. At the moment of breaking out, when people were just on the cusp of quitting, I would assume, this is exactly the way that the institutions do it. And the gold bar is a good place for profit taking. This is a good spot to trim some off. And we could actually see through it soon as well. But making sure that you have some exposure is necessary. Like the whole day today was a fight for exposure to the upside. I was saying the whole day from the very, very beginning. Like it wasn't even part of my brain to think about going for things down. And you have that some days where it's like, okay, it's so blatantly obvious that we want to be fighting in one direction that you're not even thinking about going short. This is the end of the day. Institution domain where we're literally failing 61s to make this plan happen. I'm like, you know, these are these are serious. Like we literally came up off of a failed Head and Shoulders. Like I would say that yellow line broke on the failure of that Head and Shoulders. But it was in its failure that those things happened. And it'll have that 127, 141 as each one of the lows, and it just looks like it's making slightly lower lows. And that's what this looks like here. Every single one of those lows right there came up off of a 127, 141. So I was like, okay, interesting. And then the final one as well was a 188 200. So what it did is it came down on a 127 141, 127 141, 127 141, 127 141, and none of them were a 188 until this one. Then on this 127 141, when it was in combination with the 188, then it found its way specifically back to the B point. But you want to know what's kind of weird about this? Is if you look at it, the 127 led to the B point. The 141 led to the B point. The 161 led to the B point. The 188 led to the B point. I'm like, it did them all. Like, it actually did here. Like, this is the B point right here. That one, right? You can see the 141 did it. 127, 161, 188. They all managed to come back to the B point. Every single one of them. So there was that as well. But I didn't notice that. I noticed the 127, 141s. That was good enough for me. And since we broke that trend, we haven't done that thing. Like, where in this trend have we made a 141 work or a 127 work? I mean, we made a 61 work, but I could clearly see that the next 61 was miles away and we were set to fail it specifically because they wanted everyone to think it was slow. They wanted everyone to give up. They wanted everyone to just quit here. And I think 70% of the people did. It's within their nature to, though. They're not being paid for anything. So they quit. And I'm like, they won't even see this move because they're out watching TV or something. So they won't learn about it. They won't understand that next time they should have waited. They won't understand that their patience would have been valued. And therefore, they will not become more patient. I try my best to be as patient as I possibly can be. It's a matter of I believe that patience is a virtue, even if it's not considered it anymore by the rest of the population. I think that it's something that you can practice, something that you could get rusty at. You should focus on the things that develop your patience because I can prove to you that there are things that take patience that are worth having it for. Like this move itself. I mean, everybody can see that there's no way that you can get this movement without having the patience. And I like to, like when I know, because I'm human too, I can tell when people are like, it's like I hate this. Like everyone's like, I don't want to wait another 10 minutes. I'm like, well, I just want to be clear that this is what's going to turn into blast. This is what's going to turn into something that will start failing the 61s. The institutions were eyeing it up there too, right? And they did this. It wasn't because everybody signed on at 1322. Starting it slow is not a bad thing. The low ATR convinces people out of it. Like they don't want to keep holding it, and then it starts blasting. That's the plan. You know, like most people are quit for the day. When they're done, it's like they clock out. Like they bring the habits from their job over to this industry, and you can see that they're like, I'm done for the day. Clock out, done. Don't even want to think about it anymore. I'm done working. That's what they say. And I'm like, institutions are not like that. You know, it reminds me of back in the day, like Thomas Edison. If you talk to him about light bulb at 9:30 at night, he's like, I'm not working. No, get away from me. I don't want to talk about this. Like he's in the shop, man, the 9:30 with his lights on.
Like I spend a lot of time understanding the market and remembering it like it's a my favorite book. And it's not because I see anybody else do that. I don't know a single person in the world that actually does that. I see everybody is trying their best to quit as soon as possible. And then when I see the amount of movements that happen at obscure times throughout the day, I can see that the people that move the market work just as much as I do. They literally are on it all the time, all the time, day and night, because they live by the philosophy, I believe, that if they're not controlling it, somebody else is. That's the stage that they're at. If they're not controlling it, then somebody else is. Where every day that you trade, you don't take people's money, you take their money. That's the way I see it. And if they keep moving it at particular times where I know that people struggle to make it to that period, or when it directly like contradicts the same information everybody's been learning for decades, it really makes me wonder. It ain't people, at the obscure times, and it's not people that are making their favorite patterns fail. And when I see that it's at an obscure time and that the only people that are left are the people that are hoping to make it back and their favorite patterns are now failing, taking everything from them, I find that very, very interesting. I mean, I don't know that there's a band of people that are large enough to work against what everyone's been learning for decades, because you can go to the library. If you get 100 trading books, they don't really contradict each other. They regurgitate the same information.
And why did I say that it wasn't for people that weren't taking the entries at the beginning of the day off of the clear 127, 141s where they were specifically designed to go back to the 61s? And if you could take some beyond the 61s, like I can literally make a video about saying, if you took some beyond the target of the short term, you can let it run into the break of the yellow line, especially when we knew that the right shoulder should fail to break the trend. And at the end of the day, why did I say that? Well, because look, if you bought in the red zone, you can't handle a 61% retracement if we were to make one. Can't handle it. Now, I said you could take off some profit in the yellow bar, and I hope you did, because if we make a retracement all the way back to the red, then you know you're paid for this movement. Regardless of whatever you're holding that's left, you know that that's going to be sold for a profit regardless. But if it's for less of one, you know you've taken payment at the gold bar instead of the 61. Like when I said it's danger of failing upwards, we don't think that that's a barrier that's worthy of selling at or worthy of reversing at. So it's not good for a hedge, not good for a sell. We know there's money in it failing upwards. Now, until we go back down to that 61, all those people are screwed. That's another thing. So they're not in control at all until we see them let off. So it doesn't matter if, when we go up and it's like, oh, head and shoulders, and it goes up and everyone's like, oh yeah, you see this little itty bitty head and shoulders up here, look at how well it's working. They forget that these people are absolutely railed. And anybody that sees a head and shoulders and wants to play it, why would they wait for the second one? They already know what this one means. It means going down, right? Well, look, they're all trapped in there because they know that that pattern means go down. And it's ironic to me because that's where that pattern is right there. Those people are still screwed. They were led on a little bit. They were like, oh, your head and shoulders is working, it's working, it's working. Nope. And then they were never let off. So I find it interesting when we build on top of that. There's been how many 5-wave moves that haven't come down too? In conjunction with the 61 failing, you could say that there was also a 5-wave move that didn't come down either. So has it been so bad for those people that even if we come back to where they got in, it wouldn't benefit them because they committed to the loss? Like if they've already been stopped out for complete and utter failure, coming back down doesn't help them. And do you think that the people of this right shoulder are still clinging on to a trade 127 points later? Or can we go bonk them on the head? If we did, it would look like a 61. And just remember, this trend has been built off of 61s that have been working ever since we made the low. Every pullback that we've made has been a 61. Like we can take a look at them. Like this one right here. Beautiful 61, right? This one right here was a 61 that wasn't so beautiful, but it still held really well. And even on the short term, this 61 right here kicked off the immediate trend. And now I'm inclined to keep an uptrend in there.
We're getting close to it, and now it started to become on the radar. The blue and white line is something that we were talking about earlier. We managed just to clear out all of the short sellers from the day. Where being short today is not as valuable as being long from the extreme. As of now, the biggest move of the day is not the downwards one that used to drape itself across the screen for the largest quantity of or portion of the day. But now the biggest move is an upwards move, and it's later in the day, harder for people to catch. It wasn't made evident until after 1 p.m. So I find those facts very interesting because they're facts. You know, the institutions that made these moves will remember them too, but they will remember them like they made them. They will stick in their head like, oh, I remember what I did today. I know what I did today. You know, I know how I dealt with the people today. That's what they can remember. This is how they moved it. They remember that 61 at the bottom. They remember that head and shoulders. They remember failing that 61 in the middle of the chart. They remember getting to this point and making a coffee. They remember making the environment of the morning something that made it seem like the Bears were winning. And it took a long time, but it wasn't like they were really making a ton of points, was it? It was just slightly making lower lows, making it hard for people to be long, hard for people to be long. Because anybody that tried to go long and hold it from any of this time here, it had to be sold for a profit or managed properly, or it meant a loss. So if people don't know how to manage their trades, they don't use stops, they don't drag their stops into profit, they don't take profit, they don't think about the short term. Anybody that was like, "Oh, I'm a long-term trader, I'm going to buy here and hold it." If they had a stop anywhere near their position, it was taken from them. You know what I mean? So it's tough because the time where you could say that we started going sideways today, which is for the record, 11 o'clock. You know, like this right here is a threshold where that little crappy downtrend really kind of started to commit to sideways from this point on. Because we weren't really going down from that point on. Sure, we made a little bit of a lower low, but everything was made even around it until finally we ended that stupid triangle. We tested it from above, made a head and shoulders, and started this trend on the failure of the public's favorite pattern. And just like I said about taking profit in the gold bar, this slowdown is what I believe to be the institutions doing just that, trimming some off, making sure that they've locked in some of the gains. And regardless of what happens, this trade they will remember having done for the end of the day. And that's what they'll be able to write home about, is that they continued the trade from last week and the progression, despite the fact that people's experiences was that it was down for most of the day, falling for most of the day. Now with them gone after an 11 o'clock consolidation, we counted on the fact that that would be slow enough to get rid of most of them. And it was, or we wouldn't have ran. I firmly believe it. But it is what it takes to get rid of people so that the institutions can effectively move the market without them. Because if the people were in there, they'd all sell at the 61. They'd all sell at the gold bar. They'd all sell at the obvious barriers. But if we get rid of them and we ploy on their patience, where we say, hey, every day the attention span of the average human being is drastically dwindling in first world countries. I should get that. I should get a T-shirt tainted by TikTok. Be proud of your attention span. It's like everybody's so proud of everything. Why aren't they proud of their attention span or their patience? Or like other virtues? Because there's a lot of things that the market will test mentally. Like like you can get to a point where you don't get mentally tested all the time because you've got the tools at your disposal to answer questions that are otherwise that would otherwise be worries if you didn't have them answered. Like some people are wondering about things, and it's like, oh, well, you can check this, and this, to figure that out. And if they knew that, they wouldn't be worried about it. I'm like, it's as easy as that, It's like some tools really do give you a good idea of whatever question or worry that you have. Like, oh, one big one is, when is it going to stop going sideways? How many people struggle with that? Because it's like, if you genuinely don't know when it's going to stop going sideways, and all that happens to you when you sit down to trade is that it goes sideways, I could see that getting to somebody, for sure. But that's very hard to get that nowadays. Like, I mean, our sideways, like even just this little area down here, like the smallest, tightest consolidation in this area, I would say is still about 37 points, which is pretty freaking cool. Like to have
just this area right there be 37 points, and I'm being pretty lenient with that. Like not even looking at the bigger moves, but just the tight little crappy moves that happen really frequently are about 37-ish points. Now, what happened today every other time we failed a 61? Where did we go? We came all the way up to the 141, 127, and it sent us back to the 61. Now, what's funny about that is it's never happened down from what I can see today. It's always happened up. Like this one was the reason for it to go up, 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 up. All of those levels had 127s on them. But now we got this big one where these levels start to become intriguing because this movement that we've had right here could in theory happen again from the 127 141 area, that same sort of movement to get back down. And when we do that, like let's imagine we got all the way up there. And if we imagine we got all the way up there, what would that look like if I took these other fibs off? If we got all the way up there, that would look like almost a 61, where it's true that there's multiple blue lines down there. And I do believe we will try and get them on the break of the trend, which is very limited in time. This trend may not break too well, but it'll be readjusted, readjusted, readjusted. If we get up to that 127, 141 area, it could cause a 61% retracement. And it will be to get back to the danger of failing upwards one, where we basically failed it. You know, and when we failed any other one, we go to these levels. So I'm like, put two and two together. That level right there stands a big, it's a big problem. It could pose a really good hedge for the existing positions if you do have the ability to hedge it. But obviously, that's still about another 50 points higher, 50 to 70 points higher. The blue and white line is still an untested line that marks a pretty interesting threshold level as well. I do like that. Now, of course, we are inside of a range. There is a green zone and red zone here. When we get to that blue and white line, it's not the only thing there. There is a red zone there. Now, sometimes when we get back involved with these old ranges, we don't actually like to use the middle of them, but instead we will actually use the extremes more than the middle. This could be one of those ranges where the last time that we were in this area, we went, you know, bing bong, bing bong, bing bong off the top and bottom, but now we can go grind and then grind and avoid the middle. It's an idea. It's an idea. It's an idea. Because the institutions that are moving the market will have to think about how they're going to move it back through a range they made in the first place anyways. Because they know about this range. They have this range. They made this range 100%. And they'll have it too, you know. And they'll know about the range that's higher. They'll know about the red or orange and yellow line that's higher as well. Find it very likely that they use them as they should be used. And the blue and white line is the first thing that could slow us down, I'd say, with the need to test it from above specifically. I wonder whether or not we are going to continue to avoid the middle of this area and just scoot through it, because that's what I call this, you know, it's like scooting through the range. And on Friday, if I made a video on Friday, we were looking at this spike right here being able to reproduce itself on the other side of the spectrum. That's what happened today. The distance was relatively the same size as the spike that we had on the other side of the spectrum. Just for the record, though. And there was nothing about Friday that said sell, and it is a good hold if you did decide to hold it, but it was very clear for those that didn't. I mean, nobody would buy it above the middle of the range, I would hope, on Friday, but they managed to come back over top of the bulk of everyone that they allowed to trade. The day ended here, and they made sure to clean up everybody that was inside the range. Anybody that was holding from the spike prior that could handle a 61% retracement was safe. You could see that same thing again here. Very similar kind of structure. Awfully particular, and I find it very unlikely to be the result of 1,000 random strategies clashing together that make it so perfect. It's ironic to me, and the institutions are taking advantage of the amount of time that it takes for the population to catch up with the way things are, because it seems like they are significantly behind every single day. As soon as they get used to something, it's too late already. They have to learn to anticipate what the institutions are going to do, you know, and how that will benefit them and, on the contrary, harm the people. We scooted through the range. We got through the blue and white line, tested it from above. We're at the 127, 141 territory, and we can actually chop in between these areas instead of using the
the ranges. This is an area where there was no range, and it's easier to chop there than it is to chop in the range. Contrary to popular belief, I think we do that because the least amount of people will expect it to do that. And I also look at it, and I can see that they've already made a movement that's very, very similar to the amount of movement that we pull back when we pull back, and that's how much movement we need here. So very, very clear to me that there is a risk of making a chop here that's the same size as every other chop we've ever done inside of this trend. There's points there, at least 30 points in the average counter trend move. Whether that's taken advantage of on a hedge or if profits are secured so that you can endure it however you wish. It's clear that the move can happen and it's already halfway through. The short-term trend broke. Doesn't have to break very well, but right now it's a test of the waters to see how many people are paying attention. All made very clear prior to the break of the trend that this was the risk of happening. Just from looking at this too. And if you understand all of the short-term moves for a long time, you understand the long-term moves too. If you take all of the short-term moves of the day, how have you not taken the long-term ones too? And it's so easy just to have an open mind and to say, hey, there's a good place for this and a good place for that. That's where I fit in. I'm like, I don't believe in long-term or short-term. I believe that understanding both is very necessary to doing it right. And if you look at the people that do it the best, they have long-term on lock with their fund, and then every short-term trade is a hedge against the fund. So they do both, especially that now the short-term movements can't be just brushed under the rug. We can move hundreds of points in a day, and it's considered short-term still. And, it could be justified over a long period of time. But in all reality, it only took an hour and 33 minutes after we got rid of everyone. Now, it might have taken an hour and 33 minutes to get rid of everyone, maybe 2 hours of sideways movement that don't offer people mental stimulation for a prolonged period of time. TikTok takes over, and then we go on without them. And I believe that's exactly what happened today. Now we chop in between the two ranges, roughly using the same appropriate distance that we've used every other time we went sideways. Do we do it for the same amount of time? Sometimes it's that simple, like this amount of time. This amount of time could be, I'm like, give or take a little bit of time. Now, I believe that we will have another major 61% retracement, just like we did in the overnight session twice. This movement here that we've done from this low to this high to this low, that kind of movement, I believe we will get that again. Like it's very similar to what we did over here. And it's very similar to what we can be doing over here. Like, don't you find it suspiciously particular that the distance that's required, has been met? Like if we put this on the bottom of this low here, where is the circle now? And what does it suggest? A movement back to the node? It would merely just be a 61% retracement. It's a danger. That's why I mentioned hedging up here, but having taken off the majority of the profit at the high here, you can afford for a 61% pullback. And if it wants to make, but if you take some off and hedge it, then you're in an even safer position.